Biocon just quietly did something that can completely change the future of its stock. Its flagship company is now merging with its own biologics arm. Now, some shareholders will win back, some may stuck for years. So, the only real question is this merger a hidden wealth creation move or a long term shareholder trap? So, what exactly just happened? Now, Biocon has announced the merger of Biocon Biologics into the parent company Biocon. Now, this means one balance sheet, one earning stream, one combined valuation story, and one unified growth strategy. So, this is not an accounting change. This is a business transformation event. Now, why this merger was necessary? So, Biocon was facing fragmented business reporting, value locked in separate entities, complex global funding structure, and confused investor perception. Whereas biologics was growing fast, but cash burn was high, debt was rising, profit visibility was unclear. So, this merger is simplifying capital structure, investor visibility, global credibility, and future fundraising. So, what can you expect in terms of stock market? Like, what would be the impact? On a short term basis, we can expect ideally volatility, retail confusion, speculation, and media overreaction. On a medium term, from my understanding, we can expect valuation re-rating battle and market waiting for revenue synergy, profitability timeline, and margin stability. And on a long term, only the execution will decide what is the wealth that is being created. Because mergers will not create wealth, cash flows will do. So, what is the biggest hidden risk that shareholders will ignore here? And this is where many retail investors will get trapped. First is the integration risk. Second, margin pressure from biologics. Third, regulatory approval delays. Fourth, US pricing pressure. Fifth, debt servicing stress. So biologics is a high reward and high burn business. If margins don't stabilize, this merger can suppress the Biocon stock for years. So what the smart shareholders can track now? There are five metrics which I think the smart investors can track. What is the biologics revenue growth? What is the EBITDA margin trend? What is the net debt movement? What is US market pricing pressure? And what is the regulatory pipeline execution? And they can ignore Telegram optimism, one day stock spikes, management interviews without numbers. So, who should hold and who should exit? So, you can hold, like it is your choice, it is not a recommendation. If you understand the pharma cycles, if you can wait for 2 to 4 years and you track the quarterly performance, and you can ideally avoid if you want quick rallies, you panic in corrections, you don't track the earnings. So this is not a momentum stock after the merger. This is now an execution stock. So what is the final verdict? Now, Biocon's merger is a structural cleanup move, a long-term growth attempt, and not a short-term trader's paradise. For investors, patience is power, and impatience will lead to a trap. So if you want clean pharma stock analysis, no hype, no telegram pumps, no paid optimism, subscribe to Insider Monk. Here we are not chasing medical miracles. We track balance sheets and execution. Thank you.